Welcome to Paul Champlina's Talking Property channel. And welcome, it's Paul Champlina, my YouTube channel, Paul Champlina Talking Property. And you know what we haven't talked about yet in some of our previous episodes? Finance, mortgages. Who better to speak to than Gavin Richardson? How are you, sir?
Very well, Paul, and thank you for that.
Yeah. Managing Director of Mortgage Finance Brokers.
Previously Mortgages for Business, so
Mortgages
spot
for
on,
Business.
well done. Yeah.
You know what, because I knew Mortgages for Business many times before, so I had to think about that. You've got over 20 years of experience in this game.
Yep.
You know anything and everything about finance. So you know what, I want to ask you a few questions. Let's interact. And more importantly, we've got landlords, we've got first-time buyers, we have tenants, and we have agents that watch this channel, Gavin.
Yeah.
Okay? So, more importantly, how is the market now in the middle part of 2025 mortgage-wise? Tell me.
Yeah, I think we'd be foolish to say it's perfect. Landlords especially are facing challenges from all quarters. You know, with EPCs, Renters' Rights Bill, increased, shall we say, interest rates. I say increased because the reality is interest rates are cyclical, and where we are at the moment is probably no different to where we were 15, 20 years ago. But it's new and it's high for lots of newer
landlords. They've had 0% for a long time.
Yeah, lots of people are coming off deals where they've bidden, sub 2%. Which is fantastic for them while it lasted, and the jump now to sort of 4, 5, 5.5, 6% is a shock. So there's challenges, and it's a degree of uncertainty because there's the Renters' Rights Bill hasn't landed in its entirety yet. EPC we're not quite sure how that will land, and it's difficult for landlords to make informed choices, not knowing really how the landscape will look in 6 months or 1 year's time.
So yeah, you've just done a talk at our event with the Landlord Investment Show guys, Landlord Survivor Guide 2025, done a great talk, really well received. So with regard to, look, there was something like 2 million mortgages have come to a fixed term end in 2025, I read.
Yep.
Obviously home owner, and obviously landlords and stuff, and with everything that's going on, landlords are selling. But the $6 million question I want to ask you is, what are you seeing business-wise with regard to appetite and mortgage deals and applications going in now, i.e. June, July 2025?
Yeah, we're definitely seeing a bit of a bounce upwards. We had as a company, we had a very busy May, which was positive. I think what you're seeing is, residentially, people are getting used to it, understanding it, affordability criteria, and that kind of residential homeowner market is ticking along okay. The investment market, buy-to-let market, those people that are coming off those low interest rates, lenders will lend based on their rental calculations, and they may not work the same way as they did. So what I mean, they may not actually achieve the same borrowing levels now. So they're stuck in one respect, that the only option available to them is a product transfer. It doesn't give them freedom of the market to go and look at better deals that are available, because lender A, it worked 5 years ago. Lender A is the only option now because they don't have to stress test for an
and are they all
mortgage.
stress testing?
Yeah.
Right. And how many mortgage deals are there? Because you are an encyclopedia, roughly out there. Let's just talk for. I'm doing questions now for landlords, but I'm going to come to first-time buyers soon.
Yeah.
How many deals are there out there?
The answer is thousands.
Right.
It's interesting because there are lenders out there with hundreds of products,
right,
for different criteria to meet green mortgages, or first-time buyer, or different LTVs, for limited, for personal, for HMOs, specialist property types.
Yeah, different products.
So lots of lenders have got product sets into the hundreds. I know when we were struggling, sort of October 24, 6,000 buy-to-let products were taken off the market in a week.
I know, it's mental.
So it's circa that number.
Right.
Yeah.
Okay.
Got me on the hop with that question.
No, I know that, but that's me, straight talking champs, right? More importantly, Gavin, what percentage would you say, again, I love asking these questions, I love trying to catch you out, but it's all good fun. What percentage would you say are landlords mortgaging in their personal name to companies? What would you say the percentage is?
So, MFB, we've been operating for 30 years. We're probably 80% of our business is buy-to-let. And I would suggest that probably 75% of the buy-to-let transactions we do are limited company.
Right. I mean, you saw the big shift change the last few years, obviously.
Yeah, I think it's been, as landlords have understood it, I think the gap has closed significantly between lenders' pricing for limited companies and personal. So there's no real differentiator between you buying in your personal name and you buying in a limited company.
So the criteria hasn't changed that much?
Criteria is still different, but the actual interest rate.
Yes.
If you were buying in your personal name 10 years ago, it'll probably be 2% cheaper than buying in a limited company.
Right.
But there was only 30 lenders available to you.
Right.
Now there's far more lenders lending in a limited company. You, as the director of the limited company, you're underwritten, so in essence it's not much different. The SPV is only the shell. So lenders have kind of understood this now. The complexity's been taken out of it a little bit now, and the pricing's come down.
It's much more competitive.
Yeah, absolutely.
So if you're a landlord, and obviously you've got to get some tax advice when you're looking at incorporating a company, because obviously, the effect of the introduction of Section 24 had a massive impact where you couldn't obviously offset mortgage interest relief. So what is the criteria for a mortgage lender when lending to a company compared to personal?
Yeah, so two things on that. The incorporation is taking it from a limited company for partnership into a limited company. If you're buying straight into an SPV, then that's not an incorporation, that's just purchasing in an SPV.
Yes.
So from that point of view, you as the director of that limited company are underwritten. The SPV, the limited company, is just the shell.
Yes.
So you, Paul Champolino, it's you that I will underwrite as the lender.
Yeah.
So, normal is 75% LTV.
Yeah.
Normal, they'd want you to have usual 25k income. Some don't want an income. Some want you to have a bit of an income to show if there's any rental void periods, you've got the ability to service the debt.
But there's no personal guarantees?
Yes, most mortgage lenders will want a PG.
Right.
Unsupported, unsecured. You as the director will say that if the mortgage debt is not repaid, that you will step in and pay it. They don't take a charge over your residential property.
No.
There are a couple of lenders out there that don't need a PG, but most will want a PG. They want to make sure, in reality, that you've got a bit of skin in the game.
Fine, that makes total sense, and I totally understand that. Question, what does a lender do relating to stress testing?
Right. So stress testing from a rental income point of view will depend on whether you're buying in a limited company, buying in your personal name, what tax bracket you are in, and the type of property. But in reality, they'll take a multiplier, so 125%. They'll take your rental income, divide it by 125%, times it by the 12 months, and then divide it by either the pay rate, which is your 5-year fixed interest rate,
right,
or the notional rate if it's less than a 5-year deal, and add something to it. That will determine how much you can borrow up to the lender's loan to value.
Right, I understand. Do they bear in mind the taxation liability as well?
Yeah, so depending on your tax bracket, that 125 or 145,
right,
whether it's limited, company or personal, could change. So 145 could change to 140, 125 could change to 120 if you're a higher rate or super rate taxpayer.
Fine. Question, another one. We're going to be all day. I love this.
You said it was going to be a test.
I know, I know. Yeah, exactly. It's like being at school, isn't it? So Gavin, why should a landlord use a broker rather than go direct to a lender?
So this is an interesting challenge because it's, as a broker, it's always brokerages always seem to be the ones that clients think they can challenge you on the fees. They'll pay the accountant, they'll pay the solicitor, they'll pay the valuer, they'll pay the lender, they'll pay the admin fees. Well, I'm not paying a broker fee.
Why is that?
Well, we've only got 6,000 products to search on your behalf to make sure we find the right deal.
That's easy, isn't it?
And if we get it wrong by 0.25% on a £250,000 deal, that could cost you £15,000-20,000 over the initial term. Brokers understand the lender's criteria. Brokers understand what lenders will accept, what types of property. Brokers will understand lenders' timescales, their service deliveries, all these types of things. You could walk in and go, there's the cheapest rate, I'll take that. The arrangement fee could be high. You won't know what that total cost of borrowing is unless you've got the broker to work it out with you. You don't know whether...
And there's a lot of work goes in, time-wise.
Yeah, there's huge amounts of work to get one deal across the line now. You think, the average mortgage offer takes 4 to 6 weeks and another 4 weeks to get it to completion.
Yeah.
And the broker doesn't just do the decision in principle and sit back and let it go. Managing the client in terms of delivery of all the paperwork, the right types of paperwork, making sure it's presented right to the lender so they don't catch you out, making sure your portfolio, if you've got one, is all in order, because that's changed recently. Lenders are having to be or having to scrutinise background portfolios quite significantly. So, working with the client to make sure everything's in order, so when it's presented to the lender, it's got the best possible chance of being underwritten. Doing research on your property to make sure the valuation is realistic and expected. There's no going to be any shortfalls.
I've heard enough. I'm going to pay you the fee.
I'll take it.
Yeah, I mean, it's when you explain it and break it down, it's like a letting agent. Think what they do, how they manage a property. You break it down. It's endless.
It is a lot of work that goes into a mortgage application, and brokers are the ones that are the conduit between the client and the lender, and that relationship's really important.
So tell me this: back in the day, in the big crash of 2008, 120% mortgages, no money down.
Yeah.
You were working in that industry. Tell me how bad that got and what car crash that became.
It was horrendous. And the reality was there was, at the end of the crash, there was no money to lend. We moan now. Let's talk sort of where we've got to. There was, a huge amount of increased regulation, affordability assessments, RTI calculations, affordability calculations, and they're there for a reason. They're to protect the industry and protect the client so this doesn't happen again. If we look at it from a residential point of view, you could come to me and say, I earn £100,000 a year, and I go, fab, the application went in on you earning £100,000 a year. Oh yeah, but I need 6 times my income with no deposit. That's fine, because you earn £100,000 a year.
It's like playing roulette, isn't it?
It was a little bit, fast and loose.
Yeah.
And the industry got bitten.
Yeah.
And it learned.
And people were paying deposits on credit cards and God knows what.
Yep, and you could borrow to borrow, exactly that basis.
And some people did well out of it. They lucked out.
Yeah. But the banks didn't.
But the banks didn't.
And the banking industry failed.
Yeah. So let me talk to you this. So my background was legal. I worked in the 88-90 recession. That's how old I am.
Right.
15% interest rates. Yeah. I used to go to court as a spotty 16 and 17-year-old, Gavin, and I used to get the possession orders on behalf of the banks and building societies many, many moons ago. Tell me now, right, if you are a landlord struggling to pay your mortgage because your tenant's not paying the rent or whatever, or of course your rate's shot right up and you're on a variable, or if you are a homeowner and you've got mortgage arrears because the cost of living is shot up, tell us what you should be doing with regard to communication to your lender and what's the mortgage holiday window and all that type of stuff, because it's been in the press.
Yeah, so you nailed it in the first part of that the first thing you should do is communicate with your lender. Sticking your head in the sand and not responding to calls is the worst thing you can do. Your lenders have got options available to you, from repayment holidays, or taking your mortgage and putting it on interest only, or working with debt recovery agencies to work out payment plans if it gets to that serious.
But that does affect your credit rating if you miss a payment, doesn't it?
Yes. So, some lenders will only give you payment holidays if you've overpaid. If you are in arrears and you've got problems, then you can work with your lender. It may impact on your future ability. It may put a blip on your credit score. But you stay with that lender, and you can work with that lender to not go into the repossession position. If they will, they can determine that actually you're doing everything you can to make those payments. If it's based on a tenant not paying, then there's legal recourse that you can obviously advise on and how those things work. Yeah. But it's critical that the first thing you do is pick up the phone and liaise with the lender. But
there has bbeen a directive by the government, though, hasn't there? They've given much more guidance than back in the old days. Haven't they told lenders that you have to, there's breathing space and there's all that type of stuff?
Yeah. And that's a consequence of COVID,
yes.
I think, really, when obviously there was lots of issues around people not being able to work on furlough, and incomes obviously been impaired by cost of living crisis and so on and so forth. So there are not 100% of all the mechanisms that the government has provided.
Or what's happening now,
But the definite influence from the government over the lenders is to be more supportive, to give more time, to be reasonable. All the things that you would expect.
Yeah, definitely. So let me ask this. As a homeowner, I'm also a landlord, but as a homeowner, I overpay my mortgage every month, right? What's the advantage of doing that, and what's the benefit at the end of the game?
So if you've got the affordability to overpay your mortgage, do it. Basically, you are paying off your debt quicker, reducing the amount of interest. You can either do that to get rid of your mortgage quicker as well, so you can reduce the term. mortgage or interest on a mortgage over 25 years that compounds. It's always the most frightening thing when you explain to a new borrower and you say, this is your mortgage debt, and over that 5-year period you pay this. If it then goes on to the lender's standard variable rate, it'll be this, and after 25 years you've paid back this, and that figure is frightening normally because it's worked out on worst case scenarios. But then you look at the repayment going down on the curve this, and you start to overpay, and rather than go down like this, if you can see that on the camera like that, it goes down like that. So you reduce the term quite significantly, and therefore the total cost of borrowing significantly
reduced. Your advice is, if you can afford, overboard. I talking about my own personal mortgage, I got a bit, I mean, look, a lot of it's luck, to a certain extent, and it is time. I remember I agreed my mortgage deal, I locked in a 5-year with Barclays, 3.15, right, and I agreed it, because once you agree it stays in place for 6 months or 3 months or something. Is that right?
Yeah, each lender's got a different period, but
that's right. And I did it 3 months before Liz Truss is kamikaze budget. I know, and I was and then it obviously shot up and whatever. And I think what we've got to realise, and you talked about it to our landlord pack crowd out there, is landlords had it good for a long time, didn't they, Gavin?
Yeah, one of the things we just spoke about is, interest rates are cyclical, and, we sort of look back 25 years ago as a sort of benchmark, because that's the average mortgage, and base rate was 5% 25 years ago, and it's 4.25% now.
Yes.
But yeah, base rate at 0.1%, that we're never going to go back there again. Normal for base rate, if you speak to most people.
But people got used to it, Gavin.
Yeah, they got used to it. They got used to low cost of borrowing. Yeah. They didn't complain about the lack of interest they got on their savings.
Yeah, cool. Well, the older, tired people did. Yeah,
yeah, true. Yeah. But yeah, newer landlords, those that have been in the market only for, let's say 10 years, have had a really good ride on borrowing cheap money. I think the new norm is what people need to get used to. And I think over the last 18 months, people have. That, if base rate settles at the end of this year at 4% and the end of 2026 somewhere between 3.5 and 3.25,
3.25 by the end of next year.
Yeah, that's about right.
Okay.
I think.
Okay.
Between 3.5 and 3.25.
Can we get inflation down? Can we keep it down under this Labour government?
Well, I don't think inflation will come down at the speed that the target they've set. It won't reduce to 2% at the rate they wanted it to. So we were a bit surprised when it jumped from 2.6 to 3.5. We thought 3.3 would be the norm.
Yeah.
Lots of external factors influence that. Trump's tariff, etc.
Yeah.
So it will come back down. I don't think it'll get to 2% as quickly as we wanted. Therefore, I don't think base rate will come down as quickly, and MPC have been quite split on it in terms of slow and steady is the preferred approach. Fine. So I think we might get one more cut this year.
Right, okay. By the end of 2025?
Yeah, some people are talking 2. I think probably one is more realistic.
Yeah, okay. Quarter or half? Quarter. Yeah, okay. Yeah. So Gavin, let me ask you this. Last landlord question. I've got a couple of first-time buyer questions as well. Last landlord question. So on average now, on a landlord, I mean, obviously, you talked about it. There's HMO. There's obviously serviced accommodation. If landlords want guaranteed rent or serviced temporary accommodation, you have to make sure that the provider agrees that it's a company let.
Yep.
Obviously, you said about the Green Deal mortgages and EPCs. There's only certain type of qualities. Let's talk about EPCs just very quickly. So obviously, we know it's going to go up to a C rating 2030. Yeah.
Yep.
Give or take.
Yep.
There's another conversation because possibly if reform get in, they're going to scrap a whole load of stuff. That's who knows what's going to happen.
Yeah.
What's the criteria now with regard to lenders on EPCs generally?
So, most lenders will still lend on an A to E.
A to E.
Yeah. Most lenders will want A to C.
Right. What percentages want A to C now?
Oh, that's a good question.
Roughly.
I think all of them want it.
Yeah, but I don't knock it back if you've got a D or an E.
No.
Right, okay, fine. Okay.
And some lenders have got some innovative criteria which allows you to sort of get to a C.
Right.
And then they could potentially incentivise that on the interest rate. So you can reduce your interest rate if you work towards getting it to a C.
Right. So Gavin, where can people contact you?
So you can contact me direct on my email, which is gavinr@mfbrokers.co.uk. You can visit our website, www.mfbrokers.co.uk. It's probably the easiest two ways to get hold of it.
And you've got a really good mortgage calculator, haven't you, that you did some tech on that.
We've got some fantastic tools.
Which is really good on your website.
Fantastic tools on our website to work out how much you can borrow, residential and buy-to-let and bridging now on there. Stamp duty calculators, EPC calculators, everything on there.
Brilliant. Thank you so much.
Been a pleasure.
Absolute world of information. I hope you enjoyed this. Paul Champlin of Talking Property. Please remember to subscribe and give me your comments below. Subscribe now to Talking Property.